Your car insurance company is counting on your ignorance. Here are 10 things they hope you never find out, starting with the most expensive. Number 10. If someone else hits your car and it gets repaired, you are owed more than just the repair bill. A repaired car is always worth less than an undamaged one. Buyers can see the accident history. When you go to sell it later, you get less money for it. That difference is called diminished value. You can file a claim for it directly against the at-fault driver's insurer. The average payout runs between $2,000 and $5,000, money that is sitting there waiting to be claimed. Look up the at-fault driver's insurer and file a separate diminished value claim. Document your car's pre-accident market value with comparable listings from the same make, model, and year in your area. Your own insurer will never voluntarily bring any of this up. It is not their obligation to flag a claim that runs against a competing company. That money exists and it is significant. Most people never collect it because nobody in the insurance industry has any reason to bring it up. The at-fault driver's insurer certainly will not offer it. Number 9. Your driving record is not the main factor setting your premium. Your credit score determines far more of your monthly rate. In most states, a poor credit score raises your car insurance rate more than a history of minor accidents. Drivers with excellent credit pay up to 40% less than drivers with poor credit for identical coverage. Same road, same car, same insurer, completely different bill. Insurers are legally required to use your credit score when calculating your rate. They are not required to tell you that they do. Most never will. Improving your credit score cuts your premium faster than years of clean driving. Most people never make that connection because insurers have absolutely no incentive to explain it. Your driving record is one lever. Your credit score is a far bigger one. Most people optimize the wrong thing for years without knowing it. Number 8. There is a secret database your car insurance company checks before setting your rate or processing your claim. It is called the CLUE Report, Comprehensive Loss Underwriting Exchange. Every single claim you have ever filed with any insurer across your entire history is stored in it. Errors are more common than insurers admit. An error in that report can quietly cost you hundreds of dollars per year in inflated premiums. Most drivers never understand why their renewal quote came back higher than the year before. You are legally entitled to a free copy once a year. Request it at LexisNexis before your next renewal. The whole thing takes less than 10 minutes. Read every line carefully. If anything looks wrong, dispute it in writing immediately with LexisNexis. You have the legal right to a correction, and correcting an error can lower your rate by your very next payment. Number 7. The longer you stay with the same insurer, the more they charge you. Insurers use a system called price optimization. An algorithm figures out exactly how much you will tolerate before switching. Then they charge you that amount. New customers receive lower rates. Long-term customers end up paying for those lower prices. The company you trusted for a decade charges you more than someone who signed up last month. This happens routinely across the entire industry. Shopping your insurance every 6 months instead of once a year is the single fastest correction available to you. Loyalty is not rewarded here. It is calculated against you. They count on the fact that most people won't bother to switch. Number 6. Most car insurance policies pay out less than drivers expect. Your policy pays actual cash value, what your car was worth on the day of the accident, not what you paid for it. If your car is worth $18,000 and your loan is $25,000, you owe the bank $7,000 out of pocket. That gap is real. It catches drivers by complete surprise every single year. Gap insurance is specifically designed to cover that difference. It typically costs under $5 a month to add to a policy. Most agents never raise it. The commission on gap coverage is small, and the conversation takes time. There is simply no financial incentive for them to bring it up. If you are still paying off your car, call your insurer and ask directly whether gap coverage is on your policy. If it is not there, get it added. It is one of the cheapest and most important changes you can make to a policy. Number 5. A single day without car insurance can permanently change how you are rated. If your policy lapses for 24 hours, insurers in most states can put you in a more expensive category when you renew. A missed payment, an administrative error, anything counts. One missed day is enough to lose years of clean driving history. Set up automatic payment and confirm it goes through. One missed notification from your bank has cost drivers thousands in reclassified premiums. Number 4. Filing a windshield or glass claim can raise your premium even when the damage was not your fault. Insurers categorize it as a claim regardless of cause. Before you call to file, ask your insurer directly whether it affects your rate at renewal. In most cases, paying out of pocket is cheaper than the rate increase that follows over the next 3 years. A windshield replacement costs $200 to $400 out of pocket. A rate increase applied over 3 renewals costs significantly more. Paying out of pocket almost always wins. Ask before you file. Number 3. Bundling your home and auto insurance rarely saves as much as the advertising claims. Insurers promote up to 20% off for combining both policies. In practice, comparing separate quotes from different companies consistently reveals cheaper options than the bundled rate. The bundle discount is designed to lock you in with one company at a comfortable price. It is not designed to give you the lowest available rate. Get separate quotes for both policies and compare the real total before you assume bundling is cheaper. Number 2. If you drive fewer than 10,000 miles a year, you are probably overpaying by hundreds of dollars. Pay-per-mile companies charge a small base rate plus a few cents per mile. For low-mileage drivers, that adds up to 40 or 50% in annual savings. No agent at a standard insurer will ever mention that this option exists. It is simply not in their interest to point you toward a competitor who will charge you significantly less. If your car spends more time sitting in the driveway than on the road, call a pay-per-mile provider. One honest conversation tells you exactly how much you are overpaying. Number 1. Your credit card is probably already covering your rental car. Most premium cards, Visa Signature, Amex Gold, Chase Sapphire, cover rental car damage when you pay with them. Millions of drivers pay $15 to $20 extra per month for that coverage. They already have it free through their card. Your insurer never checks for duplicate coverage. It simply keeps collecting the second premium. Call your card company before your next renewal and ask exactly what rental protection is included. If it covers the damage and any harm to others, you do not need the add-on from your insurer. Cancel the duplicate coverage through your insurer. That money is paying for protection you already have.